Welcome to this podcast from the IFR for NPO project, your home for all things relating to financial reporting by non-profit organisations. My name is Samantha Musoke and I'm your host today, recording from Kampala, Uganda. As the project director with Humentum, I'm delighted to be joined by two wonderful guests. Firstly, Sophia Hernández with the Ford Foundation in Mexico. Sophia, you're the program officer for the Build Initiative, which I understand is a grant-making approach focused on helping social justice organizations become stronger and more resilient over time. Actually, Sophia and I have regular update meetings as Ford has been a funding partner on this project since the beginning. So, Sophia, thank you so much for joining us.
Thank you so much for having me. It's great to be here sharing this space with you.
Super. Secondly, a warm welcome to Oyebisi Oluseyi, who's the Executive Director of the Nigeria Network of NGOs. Oyebisi, you've got involved with the project more recently when you accepted the role of Project Country Champion for Nigeria. It's really great to have you with us. Welcome.
Thank you so much. I'm happy to join you today.
Super. So we're recording this podcast at a very exciting time because next week on the 28th of May, that's 2024, we'll be launching the third and final exposure draft of International Non-Profit Accounting Guidance, which will be open for public comment and feedback until the 16th of September. So I'm really glad to be discussing some of the issues with you and how it links into the broader themes and conversations that are happening in the sector, which I should say go way beyond accounting. And it is worth pointing out that neither of you are accountants, which is very deliberate. It's not going to be an accounting conversation, you'll be glad to know. So I think I'd like to dive in with something sort of big picture level. And really sort of going back to the start, when Ford got involved, what were some of the reasons that Ford supported this project in the first place? I can expect that, developing an accounting standard wasn't on Ford's list of priorities back in 2019. So what made you get involved?
Yeah, thank you for that question. So we were attracted by the goal of reducing the burden on nonprofit organizations for multiple grant-making formats, since this really resonates with our grantee-focused philosophy. Financial reporting has been recognized as a problem in the sector ever since the grand bargain, like in 2015. So this project was proposing an audacious and bold solution that seemed to have the support of many in the accounting profession. And the other thing that we really like about this was the inclusive nature of the project design. Having a global advisory group and input from nonprofit organizations themselves really offer a scope that was diverse, that offer equity in countries where this project could have actually an impact. So that's really what got us interested in joining this.
That's great to hear. So that harmonization, that reducing burden on NPOs coming up strongly there. That's fantastic. What about you, Oyebisi? What were the reasons for the Nigerian network of NGOs to engage in this project as country champions? Were there any, I suppose, wins that you're hoping for your members?
Yes, totally. For us as the Nigerian network of NGOs, the project came at a time when we're already talking about chart of accounts for nonprofits and how best we can harmonize this in ways that ensures that nonprofit reporting becomes very easy, and that we are also able to showcase through that the economic impact of nonprofits. So immediately I heard of this project and I had discussions with the coordinating team as well. It was an exciting one for us and one that we do think would help us to also get to that goal of being able to report our work properly, capturing both in-kind, restricted and unrestricted funding, including being able to provide other dynamics around non-profit financial management, including accounting as it were, such that we have a standard that captures everything and is able to report it all.
I also wonder, did you have any sort of reservations or concerns when you first heard about it?
No, because, the work I've done over the last 2 decades has shaped my thought and thinking on what needs to happen if, as civil society organizations, we would stay transparent and accountable. But also, more importantly, the overarching banner for me is how we're able to use a standard accounting procedure or process to be able to show, one, our social impact, two, our economic impact, but also to be able to report to our donors, our beneficiaries, and also the interested public as to how we're spending resources and how we're ensuring that those resources make a strong impact in communities.
Mm. The reason I asked you that question is I remember in one of our first conversations, you challenged me and you said, is this some people up in England writing something that's going to be, written there and copy pasted to the rest of the world? And I felt so excited.
You were really a good advocate to tell me, no, that's not it. We're bringing Southern voices into the mix. And I think that was what gave me that confidence to say, yeah, this is where to be.
Absolutely. And I know that was part of when we were at the beginning and Ford was asking us questions about the project design. And you mentioned it earlier, Sophia, this ability and the plan to really make it a global project has been really important from the get-go. So I'm glad that's been coming out. So let's dive into a bit more of the detail and some of the content. The first is this donor reporting, which you mentioned, Sophia, at the outset. And as you said, it's been one of the big headaches in the sector, these different reporting requirements for grant reports, where each donor has their own expenditure headings, their own formats. And we've known this was a challenge, but initially we thought it was going to be outside of the scope of the project, to be honest. We were focusing on the financial statements of the organization as a whole, the annual audited accounts that maybe get published or maybe filed with regulators or whatever. And we weren't actually planning to look at donor or grant reporting at the beginning at all. But then in 2023, we did decide to set up a working group. And I'm very excited that Exposure Draft 3 includes a standard format for what we're calling supplementary statements that can be used for donor or project reporting. Now, this harmonization will be great for NPOs, of course, but there is also a win for funders. And what we've done is create a kind of bridge between the project-specific donor reports and the annual accounts of the entity as a whole. And what that means is that they can just be more reliable. So personally, I think this is win-win. But let me ask you, Sophia, from a donor perspective, what do you see as some of the pros and cons of a harmonized format for grant reporting?
Yeah, thank you. That's a great question. I mean, it's easy to see how this could make life easier for nonprofit organizations. Having the same headings or expense categories could make it easier to set up accounting systems that work for multiple grants, for example. And it's also important to note that most donors, including Ford, have set up systems around proposals and budgets and accountability reporting that they have developed over many decades. So these aren't things that are really easy to change overnight. However, there are advantages for funders too. I think the win for donors is to bridge between the report for a specific grant and the annual audited accounts of the entity as a whole. So this gives better assurance and context for the grants and the activities that we are funding. I also think, and this is particularly interesting to me, that this fits into the localization agenda as well. So if we have better, easier financial reporting, it can make it easier for local organizations to demonstrate their capacity to absorb grants and to access funding. And as I was saying, this is particularly interesting to me because I work mostly with Global South organizations. So that's one of the huge benefits that I see.
I think that is really interesting, isn't it? Because when you think of localization, you think of going down, getting closer to the ground. And here what we've got is an international harmonization, standardization project. It almost sounds like it's the opposite of localization. And yet, exactly as you say, ironically, in some ways, it actually unlocks it and it enables it. It makes it easier for local organizations to fit into this sort of a global system, because it's more predictable and it's more harmonized. And so it feels a bit counterintuitive, but it really is. It does support localization. So I think that's really interesting that you've noticed that. What about you, Oyebisi? I suppose many of your members are grant recipients and prepare reports for funders. What difference do you think a harmonized format could make, say, for NPOs in Nigeria, for example?
I think what it does for us is it also helps external auditors to be able to properly audit our accounts and to be able to move within different charts of accounts that are available. The beauty of the conversation we're having today and linking this to localization is the fact that we can bring different context in terms of expenses that we see in different parts of the world. In some countries, you won't see expenses on fuel, for instance, for generators. But in Africa, you will see an expense for fuel and generators and all of those, and generator repairs, servicing, and all of those things. So these brings that nuance to that conversation, that if we're going to have an international standard chart of accounts, and from which external auditors will be able to audit us more properly, then the voices of Southern nonprofits are very much important, which we've been able to balance here. But to now say that it helps us to then have that full cost recovery or a full picture of what it means to run a nonprofit, either in Africa, in Asia, or in America, and we can then collectively also use that in conversations with the like of Ford Foundation, whom we're grateful to, initiative. But again, one challenge that may happen, and which is natural, is a bit of resistance. And this is where awareness raising would come in. This is where discussion with donors themselves would also come in, as a way of accepting these as, a proper way for reporting, maybe on the ground, or for external audits that needs to happen in terms of how we spend money.
That's really interesting, because I can understand there being resistance from donors, because they've set up their systems, the budgeting templates, the reporting. But you're saying that there might also be resistance from NPOs, because it's a change from what they're currently doing, right? So even if maybe they have got everything set up for one particular donor, or the 4 donors that they've got, and if one donor comes and says, "I'm changing the system, we're going to use this new international standard," that's still a process of change, and there's still going to be, a hump to get over. So even if everyone's moving to one thing, which is a great long-term outcome, that's still, short-term pain of change. And I thought it's also really interesting what you said, Oyebisi, about auditing and better assurance. And I think one thing that we've heard from donors is a fear about double funding fraud. I don't know if that's something that you hear funders talk about, Sophia, in your circles, but where an NPO a fraudulent NPO could, put the same cost twice. One time bill it to one donor and then bill the same cost to another donor. And that's quite hard to spot when you have these free floating grant reports. And yet when they're tethered into the main audited accounts, you get much better assurance. Okay, so we've looked at this donor reporting. Let's turn to another hot topic that's addressed in INPAG, Exposure Draft 3, and that's support costs. They're otherwise known as indirect costs or overheads or administration costs. Now, in INPAG, we've got a kind of principle-based definition of how to calculate support costs. And there are also some disclosure requirements. Now, the donor reporting format that we were just talking about does include a line for support costs. So basically, if an NPO chooses to present a donor report in that standard format, it also has to disclose the support costs for the whole organization in its financial statements. So let me come back to you, Sophia. I know that Ford has really been a great advocate for funders paying the full costs of projects, including support costs. I know you've been calling out the starvation cycle, chronic underfunding, and things like that. So the proposals in INPAG mean that support costs or overheads could be disclosed at kind of entity level in the year-end accounts. Now, do you think that would be a good thing?
Yes, definitely. I think for funders like us who are keen to fund the full cost of the programs that we support, it's great to know the real amount of support costs that an organization spends relatively to its direct costs, and to be able to look at this over time. So for instance, if it's really low, that could be a sign of chronic starvation and underinvestment in crucial systems and infrastructure. And if it's high, then we know what is needed. I can say also that Ford has invested a great deal of effort in trying to reverse the starvation cycle of our grantee partners for nearly a decade through a series of institutional commitments, like the expansion of unrestricted support. So to give you a sense, in 2015, I think only 36% of Ford's grant making came in the form of general or core support. Today, in 2024, that percentage went up to 85% of all of our grant making. We also now pay a minimum of 25% indirect cost rate on all project grants. And last but definitely not least, we have our signature bill program, which focuses on institutional strengthening for organizations with grants that offer a multi-year commitment.
Oh my gosh, I bet that's music to your ears, isn't it, Oyebisi? That's just fantastic.
Very sweet to my ears. I wish I could get one there.
So Oyebisi, what about from your angle as an NPO? What about disclosing your support costs in your financial statements? Is it all positive?
I think it's all positive, and it helps us to negotiate better. And from where I sit, I think that is one advantage to that. Over time, you've seen donors struggling with your overheads. But if there's a systematic approach to that, and which I think this project would help us to do, is to show this is the true cost of me delivering on this type of project. And if you really want me to be successful and sustainable, then contributing to this would go a long way in ensuring that we keep our doors open for us to be able to do this type of work. I want to stay on the positive on that. And it is to say that the experience that Sophia has shared is one that we all aspire to. Once your overhead is covered, all right, as an executive director, you have that confidence to be able to face the work. And of course, if you have a funder who understands the need to cover all of that, then you can predict what the future looks like. But also more importantly, you can then spare some time to focus on the day-to-day activities rather than spending 80% of your staff time on fundraising.
I was fascinated to hear Sophia say, if the rate's really low, then maybe they're not investing enough, and if it's high, then we know what to fund. Now,
absolutely,
in my experience, that's not the way that every funder looks at these numbers, right? Oyebisi, have you had experience of people looking at those numbers and drawing different kinds of conclusions?
No, so Ford is your super donor, and I'm sure all of us aspire to getting the Ford Build grant so that we can stay sustainable. And I think this is what we would recommend if we want organizations that are really doing well. A quick example: I've been within the nonprofit space for 2 decades. I do know that the Nigerian network of NGOs is 32 years old. But just recently, we lost one of our major grants without, we're expecting that the money would come in March. And just 2 weeks to the end of March, there was an email that says, you won't have this money. This is a support you've had for 5 years. What does that do to the work that we do as Nigerian network of NGOs? It means that if we're not careful, we would close down this year. All right. And what that means is that an infrastructure organization like us, who is able to keep the space open, engaging with government, providing regulatory guidance to members, pushing back on closing, shrinking civic space, would have been lost. So the support from an organization like Ford, looking at the true cost and basing on the case study that Sophia gave us, shows that this is an organization that wants you to be in business and to be in business for the long term, such that you have resources to be able to do what you do, albeit ensuring that you innovate, ensuring that you make use of technology for you to do your work better, and that you have some time to also think of sustainability and also in some instances, succession.
So you're not just chasing the next bit of money. You've got something to be more strategic and more long-term focused.
Mm-hmm.
But I've also heard donors, and I've heard NGOs saying, when a donor looks at our financials, or they're looking for the cheapest organization to fund. Oh, look, that one's got a really low rate, so it must be really efficient. And that one's got a really high rate, so it must be really expensive and inefficient. So it kind of depends on how you look at the numbers, right? Is that something that, I don't know, either of you have come across, that sort of mentality that sees overheads as bad and inefficient and therefore to be minimized? Is there a risk that if they're disclosed, it could be a sort of race to the bottom, that everybody's having to show how cheap and efficient they are by wanting to have as low numbers as possible? Is that, I don't know if that's a risk.
I mean, we see it with peers, but the Build program is really trying to challenge that, not only in the philanthropy sector, but even inside the organization sometimes, right? For us, like, our theory of change from the Build program is the stronger organizations are probably more impactful, right? So when you make that connection, then it really changes the perspective, right? Like, and once an organization is used to invest in their own infrastructure, in how they operate, then we really start seeing the results of that. And I would just mention that for us, that has been extremely important to track. So we're conducting an evaluation that you can all access if you want, if you're curious, that it can show you some evidence of what is this connection between institutional strengthening and mission impact, because that's what we're trying to prove. And so far, the results are very positive. And also it demonstrates that this kind of support really works for different types of organizations and very different size of organizations as well.
That's very powerful. Oyebisi, did you want to come in on that as well?
Yes, I think for me, that would also depend on the life cycle of that organization or of that nonprofit organization. Sometimes if you're just starting out and you're in the startup phase, you price yourself cheap, but you won't expect the Nigerian Network of NGOs 32 years and the executive director at a 2 years of experience in the sector now pricing themselves low. So sometimes the confidence to negotiate for good rates also comes with experience, comes with how many donors you have sat with, comes with, that benchmarking of what is the standard rates across, but also what is the donor willing to support. I've had donors telling me that I think you guys are a non-profit, so why are you asking for overhead? And I'm like, okay, hello, I've got salaries. I mean, you want my expertise. You want me to be able to sit at the table with you, and you've agreed with me that I've got the expertise. So who pays for that? We go to the same market. I still have to pay school fee. I have to fill my car. I have to pay house rent. So how does it work? But again, balancing that conversation between when someone is volunteering on this job and when a professional is recruited to be able to do X, Y, Z is very much important. And I always say, some skills in our sector can't be manned by a volunteer. Monitoring and evaluation, they are skills that you need to be able to pay for. Communications, they are skills you need to be able to pay for. The executive director also, because of the time they spend fundraising, if they are subject matter experts, the knowledge they give at conferences, then coming back to develop strategic plans, board engagement, all of this would have to be resourced, all right? Your board governance, your board members can be volunteers. So having that understanding, that's why I like the fact that we have a project like this that helps us to actually look at the true cost of running a nonprofit. Whether this will now come in terms of in-kind support, which will be volunteer efforts, or donations, whether it will come in terms of skills that needs to be paid for, it becomes very much clear.
Brilliant. So I think it'd be interesting to see how this increased transparency is hopefully able to improve the way people read those numbers and interpret them. And one thing I should also add is one of the nice things in INPAG is you've got the numbers bit, but there's also this narrative report. And we're really encouraging organizations to talk about their indirect rate in the narrative report. you can say, well, this is covering the costs of, our safeguarding and our fraud prevention and our financials and our, all the things you've mentioned, Oyebisi, as well. You can make the case for why your indirect rate is what it is. And that helps make that case even within the report itself. So I'm really excited about that and hopeful that it will be a positive move and change some of the sort of conceptions. Brilliant. So the final area I'd love us to talk about is unrestricted funds. And you've both mentioned it a bit before as well, because some of these things are all interlinked. But, this idea of flexible funding, unrestricted funding, building reserves and resilience, which are obviously at the heart of the BUILD programme. These have been really hot topics in the sector in recent years. Now, when an NPO prepares accounts using INPAG, there will be more transparency about unrestricted income and how it's used, and the amount of general or unrestricted reserves. So if you've got restricted income, you get a grant report to the funder. There's quite a lot of reporting and transparency around that. What we're bringing in now in INPAG is transparency around the unrestricted income and expenses as well, and the fund balances. So Oyebisi, I'd like to start with you for this one. Do you think this is important for a non-profit? Are there benefits or are there risks that you see for having more transparency about unrestricted funds?
As an executive director and, working with peers in over close to 4,000 organizations that are members of the network, unrestricted funding is what you would like to have as an executive director of any non-profit organization. However, the challenge there is, how do you stay transparent? And how do you ensure that you are not spending outside of what you should be spending? And this is where I think the role of this type of process would be useful in, but also helps both to be able to track, especially the finance committee, to track what your spending looks like. It makes it easy for your quarterly reports to look at where is the unrestricted funding going to. Because, for me, unrestricted funding will be a bit of discretionary funding that you can quickly use. But what mechanism are we setting that ensures that, we can get board approval before that type of money is spent? And what, at the beginning of the year, are we planning to use our unrestricted funding for? All right. So that has to be there. The core level of corporate governance guarantees that whatever financial management system you have in place, you are able to keep track of what is happening there. You need a lot of, transparency in that regard, and you don't want to leave that to the discretion of the executive director alone. There has to be some safeguards in being able to manage unrestricted funding. But the beauty of unrestricted funding is that it helps you to innovate. As I sit here, there are a couple of innovations I want to be able to do if I'd gotten unrestricted funding. For example, with emerging technologies, when you send an email to majority of our members, very few will respond to the email. So I was joking someday with my IT colleagues to say, what if we develop a drone that can visit all of our members and drop our newsletters in hard copies, all right? Making use of artificial intelligence and all of those things. Well, that's the beauty of having unrestricted funding. You can innovate, but within that innovation as well, you must be sure that it falls within your vision and mission as an organization.
Lovely. I love that. And I love that ability to focus more on your internal governance and internal accountability and supporting the board to do their job and giving them the information that they can actually question stuff and hold the EDs and other staff to account, which is really their role. I think that's really wonderful. So I know that the provision of flexible and unrestricted funding is an area that Ford, again, has been a global leader and really at an impressive scale. So I wonder if you think that having more information about unrestricted funding of NPOs, will it make it easier for other funders to follow your example? Will it make it easier for funders to give this magic, wonderful, valuable, unrestricted funding like Ford does?
So this is a big advocacy space for Ford. The BUILD team, for instance, have been spending a lot of time trying to influence other donors towards more trusting relationship with their grantees, longer term and more flexible support. And for this, transparency is key. right? One thing that I really like about the build program, for example, is that when we're thinking when is a good time for an organization to receive a build grant, is actually if they're about to go into a leadership transition, or they're renewing their strategic planning. Like, we see this as an opportunity rather than a risk. No, there's a lot of interest, and many funders come to us to learn about our experience, but still many find it challenging to move really into that direction for different reasons. But what we always say is that there are very different ways to do this. It doesn't have to be a replication of the build program. We see that at the moment, if a funder wants accountability, they often feel the need to retain control of how the funds are used. So we think that more transparency about the use of unrestricted funds controlled by the organization removes this need. So this could be a game changer. And one thing we also like to say is the biggest risk of all would be not having civil society.
Yes, absolutely. I love that. This idea that there can be accountability, even external accountability through your annual audited accounts, but without external control. You don't need to micromanage every shilling that's spent, because the organization can take control of that, but we can have accountability through transparency. This is my dream for INPAG, that we can help break that lock, shift the power through good financial reporting. Wow, what a way to end. Well, with that, I'd like to say just a huge thank you to my guests today, Sophia and Oyebisi. And if you're interested to check out the INPAG Exposure Draft 3 for yourself, please visit www.ifr4npo.org. Thank you, Sophia.
Thank you so much.
And thank you, Oyebisi.
It's a pleasure joining you.